Welcome to the Mortgage Life podcast.
Here we are. It is, what is it? It's July 30th. This is,
Oh my gosh.
I know, crazy, right? So we are halfway through the year. We actually just passed halfway through the year. We've had 4 Bank of Canada readings up to today. Today is the 5th rate announcement.
5th rate announcement, middle of the summer. We're in person. Look at this.
I know,
Isn't
it's
this
crazy.
exciting?
I had to figure out all the wiring. So if you see wires everywhere and us trying to huddle around the microphone,
Yeah.
you know what's going on.
And I'm not usually wired, so I apologize if I start hitting things, but it is what it is. Here we are.
Exactly. So, Mindy, July 30th, we've got a Bank of Canada announcement. We are anxiously and patiently awaiting the Bank of Canada to drop rates. And did they?
No. You've landed on the Mortgage Life podcast, where we strive to bring you mortgage-related info that's easy to understand.
We have conversations with market experts to bring you timely updates, because there's one certainty in this industry: things change.
I'm Mindy Bodwin.
And I'm Pete Solomosi. Welcome to the Mortgage Life podcast.
So once again, the Bank of Canada just kept things exactly where they are. So what does this mean? There's no change. So
No change.
No change to a variable rate, no change to an adjustable rate, no change to your HELOCs, lines of credit. As far as fixed rate goes, I think we say this every time.
Yeah.
They're not directly impacted by the Bank of Canada rate announcement. So once again, they're not going to change either.
Right. So anything that's variable or adjustable stays the same. Fixed stuff, really unrelated. You've heard this. We've kind of said this before. It is unfortunate that there's not any cool news that we can share today, but we can go through why the Bank of Canada decided to make this non-announcement, or this announcement about things staying the same. So Mindy, maybe give us a bit of a background and just a quick explanation as to why they decided to just leave things as is.
Yeah, so I don't want to get too technical. I mean, there still is the big uncertainty word. However, this time Tiff Macklem did kind of give some 3 main points for why they kept the rate where it is. So number 1, the tariff uncertainty remains high, right? The trade deadline is tomorrow. See what happens. Maybe the interest rate announcement could have been next week, but it's this week. They said it ahead of time. So that remains high. Number 2, the Canadian economy is actually showing signs of resilience. It's not these sort of uncertain times, tariff, non-tariff, hasn't been affecting it as much as maybe it could have. So again, and this is so far, of course, this is working in the opposite direction. We're maintaining our resiliency.
Mm-hmm.
The third point is that inflation is still close to its 2% target, but it's actually I think it's at 2.5%.
Yeah, they estimated that it was right on 2.5%, which is right in that middle of where the policy target is.
Yeah.
So they're kind of right in the middle.
But that's up though from the last. So
That's true.
It's showing pressure of going up. So typically when inflation goes up, they increase interest rates to tamper the economy. So this is why there's a bunch of different weird things going on. So they're like, you know what? We're not going to make any changes. We're just going to stay the same.
Exactly. And I found it interesting too that the Bank of Canada, they also hesitated on projecting what the GDP growth was. They did say that it was kind of down a little bit. And really what all that means is that the Bank of Canada, because of a lot of these uncertainties from the US and other factors, they're really not sure exactly what the numbers are. And I think that uncertainty also factors into their decision to kind of leave things the same, because they're not exactly sure if the Canadian economy has grown or if it has shrunk.
Mm-hmm.
And those kind of big picture items, the economy growing or shrinking, really does relate to where they want to go with interest rates. So again, they're a little hesitant to tell us where things are at, which means that they're pretty uncertain as to where things are going.
Yeah, so uncertainty means let's just wait and see for now. So that's the technical part.
Yeah.
We've been sort of saying the same thing now, but Pete and I were chatting and, he had a good point. So what does this mean? Like, okay, so my rate's not going to change. Does that mean I just stick with what I've got and just wait till the next rate announcement, that may not be the case.
Yeah. So I always say there's a few, I'm going to say three important factors to consider when just looking at your borrowing and housing. So, number one, whether you have a mortgage or not, number one is, I guess this one really relates to if you have a mortgage. Number one, if you have a mortgage, are you happy with your current lender? And by happy, I don't really mean like, you know, did they make you smile, or did they give
Do
you the
you
one?
and Susie get along well?
That's
No.
right. But things like, and this is a direct conversation that I had with a client yesterday, is they've had a change of their bank rep 4 times this calendar year. So in 7 months, they've dealt with 4 different people. Each one of them has to review and figure out their file, and that just gives them a lot of pain points. And so for the client, their big pain point was, I'm just not happy with the lender. I don't deal with the same person. They don't know me. I have to re-explain the story. I just need someone that's going to care. And so this is where us as mortgage brokers can come in and say, okay, well, let's put you with a lender where we think that you're going to have better success.
And you also have the mortgage broker, right? So that's the nice. You keep that mortgage broker relationship. That is your go-to person for the life of your mortgage and beyond if you need it to be. And the lender matters, right? Some people like working with banks, some don't. You are allowed to not like your lender. It
Yeah,
happens a lot.
exactly. So that's number one, is do you like your lender? Number two is, do you need to pay out, or is it worth considering consolidation of other debts? So oftentimes we talk about this kind of just after Christmas, but like when we accumulate debts on credit cards or lines of credit or even on loans, a lot of those are at higher interest rates. And a lot of times those higher interest rates also lead to a bit higher payments. And so at some point, it's worth reviewing and going through whether or not your current overall debt situation is worth consolidating, because a lot of times mortgage debt, well, I'm going to say almost every time, except for sometimes when car loans are really cheap, but a lot of times unsecured debts, so that's again lines of credit, car loans, other loans, uh, credit cards, those are all at fairly high rates of interest. So
Mm-hmm.
they typically are higher than what you'd have on a secured debt like a house, a mortgage. And so those are good to review. And your mortgage broker, Mindy, and I, we can certainly look at doing a calculation for you that can review the current expenses that you have, so the monthly payments, as well as the average interest cost of all the things that you have, and compare it to consolidating and looking at a new debt.
Yeah, it's always good to have a fresh start.
Yeah,
It's quite common. I'm seeing a lot of life's been a little bit more expensive in the past few years.
very
So
true.
people are accumulating credit card debt. I see a lot of line of credit debt. An unsecured line of credit has a higher interest rate than a secured line of credit does. So some people are doing refinances, paying off debts. You can put that in the mortgage component, or you could get a secured line of credit, which is also helpful because you have more flexibility in prepayment.
Yep.
So yeah, that's another change that you can make.
Yeah. So that's the second scenario. Third scenario is when you're coming up to renewal. So if you're coming up to your current mortgage renewal, that might be 1 month away. It might be 3 months. It might be 6 months. It really depends on if whether your lender tells you or if you've actually been keeping track. Some people are very much on this. Some people are not. But look to see when your mortgage renews, because there's I think, a really big opportunity at
Mhm.
renewal. It's called maturity, to give that fun technical term, so that when that mortgage matures, it is actually completely open to being paid out, which means that there's no penalty to pay it out. So if you do need to do some sort of a change, whether that's just simply moving a lender, paying out other debts, doing that consolidation, that is a really good time to look for that opportunity. And the other kind of side to that is, we as mortgage brokers can be a very good tool for you as the mortgage consumer to figure out whether your current lender is actually offering you a fair renewal. So a lot of times clients will come to us and say, well, I've got this letter from my lender. Just let me know if it's is it a market rate? Am I getting a good deal? And in those cases, we can tell you what the market rates are because we have access to ah, almost 100 lenders.
Mhm.
And so we can tell you whether or not they're being fair. And in all cases, if the lender is being fair and they've given you a good renewal, it's really easy. You just sign the paper and we'll let you know that that's a fair renewal. But if for whatever reason they haven't given you a fair renewal, or they're just for whatever reason deciding to give you a higher rate than perhaps what the market rates are, then that's an opportunity for us to provide you with not only interest savings but potentially a lower payment.
Mhm. And in some cases, the lender will send a renewal out 6 months ahead of time, and they'll try to sort of dangle this like early renewal rate. And
True.
that early renewal rate is a blended rate of your existing rate over the remainder of your term and then the new rate on the new term. And I've seen that rate be quite high.
Mm.
However, clients think that they're getting a good deal because it's an early renewal rate. So lots of things to look at renewal time.
Yeah.
We actually recorded a whole renewal podcast because there are so many different opportunities at that time.
Exactly. So just check back. That's about, I think it was about 3 or 4 episodes ago. Really good episode on renewals. In fact, one of the few episodes where we've had clients reach out directly. So definitely check
Mhm.
out our renewal episode. There's lots of great information. And we actually go through 5 different scenarios where we break down what you can do and what the costs are and what that looks like. So check that out.
Yeah.
So in summary, Mindy, we had the Bank of Canada.
Yeah. Well, nothing really happened.
Yeah.
Yeah, we're staying the course, and the next announcement is September 17th. So stay tuned.
This is The Mortgage Life,
We look forward to continuing the conversation.
so come back and listen.